We're going to talk about those 5 retirement planning mistakes, and let's dive right in with that very first one.
Well, Michael, the first mistake is not having a plan to generate income in your retirement. Because if you want to retire successfully, your money needs to work for you to help pay for retirement. When you retire, you'll likely end up in one of 2 positions. One, you're living off of your retirement savings. This means that every time you spend $1 and every time you write a check or charge something on your credit card, you see your savings shrink. That's unnerving. So you're living in constant fear of running out of money in retirement, and that doesn't sound like a great way to enjoy your retirement. But if you're in the other camp, your money's working for you. You have different sources of income coming in every month or every quarter by design, like clockwork. These different income sources allow you to do all the things you dreamed of doing in retirement. Things like spending money on your kids and your grandkids, traveling or buying that vacation home. So this is a really important piece of the retirement planning puzzle. But most people go into retirement and they don't have this part figured out.
And that's scary. But generating income in retirement is not as easy as it used to be, is it?
So generating income in retirement today is not without its challenges. And it's true, you can get far more attractive interest rates on CDs or treasuries than you did just a few years ago. But you could still be losing money after you consider the impact of inflation and taxes. Bonds aren't much better. And the people still fear of the stock market, and they don't want to risk their principal. Social Security is another important source of income in retirement, but it also has its own set of challenges right now. According to the Congressional Budget Office, the Social Security Trust Fund is projected to run out of money in less than 10 years. There's no real solution to fix this problem. So this is having an impact on how and when you should file for Social Security benefits.
Very serious decision. So Matt, how can retirees generate income in retirement?
Michael, it's a great question. I think your strategy should have several different sources of income, all from different non-correlated sources. The more diversified these income sources are, the better protected you'll be during inflation, market downturns, recessions, which are all bound to happen again and again during your retirement.
And Matt, that makes so much sense. We know plenty of retirees worry about running out of money during their retirement. What is that second mistake that retirees really should know about?
Michael, the second retirement planning mistake is not having a strategy to reduce your taxes. People are so worried about running out of money that they often miss out on this one. The second mistake is not taking any steps to reduce your taxes in retirement. They'll be paying fewer taxes is what they expect, but I can understand that because you're no longer earning a paycheck. But unfortunately, that's not the case for most hardworking Americans. When you add up the withdrawals from your IRA and 401k, your Social Security benefits, and other investment income, you could find yourself paying even more in taxes while you're in retirement. And to make matters worse, you probably won't have the same kind of deductions that you had while you were working. These deductions include writing off mortgage interest or claiming dependents, so taxes could really end up being one of the biggest expenses in retirement. On another note, taxes could be an even bigger deal for the next generation of retirees, and here's why. In the past couple of years, the government has gone on a massive spending spree between economic stimulus, new infrastructure, social policy bills, and more. Our national debt is at an all-time high. But you have to understand something really important. The government doesn't have money of its own. The only way to pay down this debt is by raising taxes, in addition to other challenges that are going on in our current economy right now. Higher taxes could be the next shoe to drop.
That's an ugly shoe. So Matt, how much higher could we see taxes go?
If you look at the history of federal income tax rates, taxes today are the lowest they've been in over 40 years. The top tax rate today is 37%. But if you can recall back in the early 80s, when you had a huge problem with inflation, the highest federal tax rate was 70%. And I'm not suggesting that taxes are going to go up to 70, but there's a lot of room between 37% and 70.
Still a daunting number. Matt, this could really be bad news for retirees, could it not?
Absolutely, and it could be some of the worst timing possible, because if you're nearing retirement, this means you could be paying a lot more in taxes on your IRA and 401k withdrawals And you could be paying higher taxes on your Social Security benefits and higher taxes even on your investment income like dividends and real estate. So the money you were counting on for retirement could end up being a lot less than you thought it was going to be.
Matt, is there anything retirees can do to protect themselves from higher taxes?
Fantastic question. Well, Michael, believe it or not, you have more control over how much you pay in taxes in retirement right now than at any other time in your life. But it doesn't happen automatically. You have to be proactive and take action. The key here is understanding the difference between tax preparation versus tax planning. Let me explain. Tax preparation is something you've probably done all your life. You prepare and file your taxes every April with the help of a CPA or an accountant. But other than some obvious deductions that might save you a few dollars, at this point, what's done is done. You're just reporting tax history. Tax planning, on the other hand, is something altogether different. Here you're looking forward, not backward, and you're using the tax laws to your advantage. So tax planning could be especially powerful in retirement. It's not uncommon for us to uncover tens of thousands, if not hundreds of thousands of dollars in savings. We see results like this pretty often.
So I can see why overlooking tax planning in retirement could be a huge mistake. Matt, what advice do you have for our viewers out there about tax planning?
Well, retirement planning could be a huge mistake for you if you're not focusing on the type of tax implication that you could have. If I ask you, though, Michael, how much money you have saved for retirement, you'd probably know that number right off the top of your head, right? But if I asked how much you'll owe in taxes on your retirement savings, would you know that number right off the top of your head? And don't feel bad about that because most people don't have a clue. But that's the most important number you need to know, right? Because if you don't know how much you'll owe in taxes, you really don't know how much money you'll have for retirement. And that's why we put something together just for our viewers on the show today. Discover how you could drastically reduce your taxes in retirement with a free retirement tax savings analysis.
Matt, explain for us how that works.
Absolutely. Once we get some basic information from you, we determine the tax saving strategies that are best suited for your specific situation. Then we sit down and share these strategies with you so that you can see exactly how much money you could end up saving. I'm not talking about some obvious deductions that might save you a few bucks here or there. The savings could be tens of thousands, if not hundreds of thousands of dollars in retirement. And taxes are going to play a critical role in your financial game plan. So take advantage of this opportunity to learn exactly how much money you could save.